Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Mark Iarchy. Mark is a partner with Worldstar Aviation. Mark is sharing his thoughts with us today for the purposes of our Leaders Report. And I should say we are recording this on the 8th of November in Singapore. Mark, thanks so much for joining us for the discussion. Before we get to the topics, would you mind telling our watchers a little bit about Worldstar Aviation?
Sure. So first of all, thanks, and delighted. This is the second time we're doing this. Last time was over the phone as opposed to all sitting together.
Nice to be back in person.
This is a lot better. So so for lack of a better explanation, Worldstar is a mid-size, midlife lessor. We are, like everybody else, globally present. We're based out of London, but with teams in various places. Including a growing office in Lisbon. Most of our fleet is midlife packs, but we have 4 strategies. We have midlife packs, we have stub leases to part out, we have a growing freighter strategy, and a green time engine pool. So those are the 4 pillars. We're very metal focused, which effectively means that we don't focus on the new end of the spectrum, where quite frankly there's not much you can do in terms of the metal. So we'd be bored buying brand new aircraft with 12 years of literally praying for residual values to hold, and that's not what we do. So
and can I ask you then, what have you seen? We're chatting a lot about the recovery, and what we've seen has been a very strong bounce back. As I say, we're sitting here in Singapore, the first time I've been east in 3 years, like a lot of people. So we're seeing a strong recovery. Can I get your thoughts on how you've seen that evolve over the course of the year, and just what opportunities that's driving for you guys?
So I think clearly there is a recovery, and you can see it in terms of numbers of aircraft still parked, which is reducing. Narrow body fleet in particular is extremely active and growing so. US started, Europe followed, Asia is finally starting to get back together. Transatlantic is doing extremely well. Pan-Asian not yet so, but will for sure get back to where it was. There's no reason why it wouldn't. And it's evidence again. You try and get a space on any flight, pretty much anywhere you want to try and go, and everything's full, and prices are 3 times what they were last year. So.
And from an opportunities perspective, then, what demand are you seeing in the market coming out of that bounce back?
So we're seeing that most airlines are focusing very much on the delivery of their new aircraft, how those are delayed or otherwise. Particularly delayed, we've seen there's still massive delays, cumulative delays effectively, of aircraft that weren't built during the COVID period, both on the Airbus side, even more so on the Boeing side, given MAX and 787 issues. And so we're also seeing, while at the same time many airlines are continuing to introduce new aircraft, they're also continuing to extend their NGs and CEOs because they have to. They're also having issues in terms of availability of their own aircraft, given the continued dislocation at the MRO level, both from a frame perspective and particularly on the engine side. I mean, demand for engines is, functioning engines, is at an all-time high, given massive delays at the engine MROs.
And if you that speaks to opportunities that are there, can maybe just talk to some of the headwinds for a moment, right? So we're in an environment of inflation like we haven't seen before, a volatile and rising interest rate environment. We're seeing US dollar cause issues for some carriers, right? And given their nature, and how challenging is that making kind of medium-term planning when you're trying to get transactions done at the moment? There seems to be, anecdotally, a little bit of a clog in the market, right, because of this uncertainty.
I think it would not be unfair to say that on virtually each of the key drivers, there's been complete dislocation in the last 5 years, and all of the ones you mentioned and more. So you look at pretty much every item on airlines' balance sheets, and every single one of them is being thrown upside down in the last few years. And it's I have massive sympathy for airlines in terms of the difficulties that they are facing. They don't know where things are going to be in a year or 2 years or 3 years' time. I mean, they tried to get back together for a proper summer schedule, and airports weren't ready. Of course, the governments that own the airports blame the airlines, but it's just politics. But in terms of where they need to go, and look, there's massive demand for flying. Even though there will be a recession, I don't think it's going to dampen that massively. So demand for flying means they need to get aircraft ready with crews and everything else that comes with it. So they need to really focus on where that goes. I think the massive increase in ticket prices should, in my opinion, more than overcompensate for the increase in oil prices. I don't know that that's a massive. It's as big as a driver as people complain about.
And maybe honing in on one of those uncertainties is the interest rate piece.
Mm-hmm.
From a lessor perspective, how challenging is this environment where we have rate rises but a bit of uncertainty as to where they're going?
Mm-hmm. So when we model our purchases, we're finding ourselves with cost of debt that is rising literally by the week or the month. We looked at something in September with a 7% cost of debt, and it's now 9.50. So clearly that means that we got to pay less. So people who bought aircraft in the last year or two and who need to refinance are probably going to struggle more than others.
And are you seeing an uptick then in lease rate factors that would be the logical follow? There's always been a slight lag,
mathematically,
right?
Lease rates go up or the purchase price of the aircraft goes down, and it's one or the other.
And what are you seeing?
I think we're seeing both.
Yeah. And feeding that in maybe more broadly on the debt side, what avenues are you seeing available, right? So have we seen, there was a feeling at the start of COVID we maybe saw the aviation banks retrench slightly. Mm-hmm. They seem to have come back to the market more broadly.
Yet. No.
Yeah.
Look, the lessor industry did not grind to a halt after the banking crisis of 2007-08, when effectively most of the banks stopped lending to the aviation industry, and the business didn't grind to a halt. I mean, people were still raising money. A lot of deals were being done with equity only. Returns were higher, but things were still happening. Now debt is definitely available in as large quantity as you want, just at a higher rate. That's it.
And the providers of that debt, traditional aviation banks, we've also seen probably in the last 2 years the alternative lenders.
The new lenders.
Can I get your thoughts on that space, and is it something you see that will be an increasing and recurring trend?
So as we look to fund our own deals, we now obviously also turn to the alternative lenders for quotes and terms, because most of them have much more of a lessor background. Even though they're lenders, they have much more of a lessor background. They understand that they don't necessarily need to be constrained by appraisals. Interestingly enough, some of them don't even have they don't even have swap costs on their own funding, which is interesting because you can pay down debt without swap breakage costs, which makes it interesting. They can be more flexible in some ways, and so I think it's a nice addition to the space. I think it adds to the choices that we may have when we look to fund assets. Doesn't mean we need to use them, but it's there, it's available, and we have no issue with it. I mean,
Yeah. And can I get your thoughts maybe on the asset-backed securitization market? So we saw that market bounce back, maybe surprisingly strongly in 21, but a very sentiment-driven market. We saw post-Russia probably one transaction and nothing since, right? Just get your thoughts on where that market sits and the importance in it reopening to really push a strong and robust trading environment.
yeah, I mean, we were the last three tranche ABS that was in November 2021. I guess that made it easier to get the deal of the year award that we received in New York 2 weeks ago, as we were the only one, but we got it anyway, which is great, and we're very happy with that. But look, and I've said this in public many times before, I felt that people saying, and we sell through the ABS market, I always thought that was, I never liked that expression, because to me the ABS is simply another form of debt where you buy a portfolio, you have an equity component and a debt portfolio and a debt component. If you're able to play with appraisers and structure in order to get all your money out and then leaving everybody else, pushing all the risk out to other people, I've never quite liked that. And I thought the structures that came out in the last 18 months were healthier. And as a debt investor, I think you want to know that you've got an equity investor behind it who supports the deal and who will have pain if the deal doesn't perform. And so for me, the structure that we saw in 2021 was better than the pre-COVID ones. And I think once the interest rate cycle readjusts and people understand that, they won't need to buy a bond today, only to see trade at 90 cents in a month from now, I think this market will reopen. Yeah, I'm pretty sure of it.
Yeah,
because the single waterfall structure of the ABS model is inherently extraordinarily flexible and helpful to finance a ring fence portfolio. So I think it makes a lot of sense. Does it need to go up to 85, 90% LTV? No, it doesn't need to do that. That doesn't change the fact that it's flexible and it works well.
And maybe looking then specifically at the investor environment, have you seen any trends on the investor population coming in aviation post-COVID? Or is it similar type, the names change, but similar types of investors? Just obviously you would spend a lot of time in chatting to investors. Have you seen any interesting trends?
Okay, the bond investors are sitting on their hands for now, but the names are the same. They haven't really changed. It's not a particularly huge universe. I mean, when you go and market an ABS, for example, it's not like other bonds where you can market them to 1,000 possible investors. It's maybe 50, 60 people. That's all it is. These guys are not playing right now, so they're not there. They'll come back. I'm pretty sure they will. Equity investors? Nope, I haven't necessarily seen a whole new demography of investors coming into the space. They're pretty much the same type of individuals investors. One firm or another, some more, some less, but more broadly speaking, the same people. And the same, whether you look at Japan or Korea or whatever, they're the same people. They have periods where they buy more and buy less, but that's about it.
And probably feeds into your perception of aircraft as an asset class. We've seen a significant maturing probably over the last decade, and that's backed up by things like the ABS market, things like the unsecured bond issuances that the IG lessors can do. Would you have any concern where we've weathered the storm of COVID, but now we have a bunch more of uncertainty facing the market, that as an asset class, aircraft could be negatively impacted? Or do you believe that the counter to that is, we've got through this, we can get through anything?
Well, we definitely came out of COVID feeling that we had weathered this most incredible storm. And I mean, look, you had an entire industry where literally somebody pulled the handbrake in the middle of the motorway and stopped from one day to the next. And yet the industry survived. Most players are still out there. A bit of restructuring here and there, but broadly intact. And then we got Russia. And, now inflation and interest rates. And there's no doubt that this is affecting everybody. Do I think there's going to be blood on the walls? There will be. But that's okay. I don't think that's necessarily a bad thing. The reasons why you have cycles is that it cleans things up. So I'm okay with it.
And maybe looking at leasing from a macro perspective, when you look at the long-term trend, the percentage of leased aircraft really only goes one way. Mm-hmm. And we saw probably a slight step change coming out of COVID, and we've seen that 50% threshold breached. Mm-hmm. Your thoughts on the sustainability of that percentage of leased aircraft, or do you see it going higher?
I think the airlines need to be able to continue to buy their own aircraft direct from the OEMs. How they finance them subsequently will probably continue to be a mix. I don't have a crystal ball as to whether that's 50 or 60% or 40%. I think 50% sounds about right to me. I think that's okay, it's healthy, and it still leaves plenty of other opportunities open from different other financing types, but I think it's about fair.
And looking at the leasing market more generally, do you think scale is going to become more important? Like, it's obviously, scale always has importance, but do you think in the environment we're heading into that scale increases in importance?
Look, I imagine that a AerCap going to Boeing and Airbus and put in a forward order will probably get them favorable terms compared to, Wellstar went and talked to Boeing about 5 aircraft. He'll probably get different terms. Do I think that is necessarily the key thing? No. I think scale is also helpful because if you have aircraft everywhere with different people, both young and old, and you can do different trades. You can have a different conversation with an airline as opposed to when you just have one aircraft there. It's what it is. You talk about anything else? No. Okay. So I think there's definitely advantages, but that doesn't mean that there's no space for different lessors with different sizes and different strategies. I also think that smaller lessors and look, we're 120 odd assets right now, and you could say that that's small. It's obviously bigger than we were, and we like the space we're in and how we're able to roll and how we so often win against bigger guys, and we have to work harder, and that's okay.
And probably feeds in, you mentioned at the start a little bit of where your focus is from a fleet perspective. Can you expand on that a little for us and kind of, where you view kind of investable metal and where your focus is, and maybe building on that, talking to us a little bit about the play you've made in cargo.
Okay. So for us, an aircraft is a piece of equipment that you effectively invest in to drive and derive cash flows from over a period of time. That's what it is. And you obviously can lease it out, no reserves, no nothing for 12 years, and that's fine. But how do you derive superior returns is by continuously choosing whether to reinvest some of that cash flow in the aircraft, how you reinvest it, or not reinvest it and just simply keep sucking it dry and then scrapping it. And the ability to have these choices, and conversion into cargo is one of those choices, is where you are able to derive higher returns if you know what you're doing, and you work the metal harder, and that's what we do. So that's why we're not in the front end, and that's why for us it's midlife all the way to end of life, including cargo. And we've always been in the cargo space. It's always been a important segment in terms of the use of aircraft. We have recently become more involved in cargo, where we were able to buy effectively the largest single collection of classic freighters, and we didn't do that because we thought classic freighters is the best thing to do, but as a portfolio it made a lot of sense. It still has very nice legs to go, and it will do very well on a standalone basis. But because we're also converting 737-800s, it opens up an entire ability for us to talk to the freight carriers and say, look, we have these couple of 400s with you, we can extend them, we can take them back and give you 800s instead. It changes the conversation. We talked about size earlier. AerCap can do that across an entire variety of aircraft. We can't do that, but we can do it in freighters.
And that market, we've seen, a clear step up in demand coming out of COVID. Your view on the sustainability of that step up? I think cargo's always been a little bit spiky, right?
Mm-hmm.
Demand
Yep.
would be more volatile.
Yep.
Your thoughts on longer term, what that trend
Yep.
will look like?
So there's a view that I've been hearing a lot, that, oh my God, everybody's converting 800s. There's going to be a glut. I don't think so. I think first of all, yes, there's more supply of 800s because the 800s finally become cheaper, and it's finally getting into a price range that converted makes sense, gets you a lease rate that makes sense for the freighter operators, makes sense for everybody. But it's not going to be a massive glut in the sense that there's going to be I think demand for these aircraft is coming from a number of different areas. You have some parts of the world that are still very significantly underserved, whether that's India, whether that's China, where there's in both places very significant demand for air cargo. You have other areas where there's a decent amount of supply, but a lot of that is in very old aircraft that need to be replaced. So you have still a large classic freighter segment that eventually is going to need to be retired. And even if a recession reduces e-commerce, for example, that replacement still needs to happen. So I think e-commerce is here to stay. It's going to continue to grow. It may slow down a bit next year, but I think it'll continue to grow. And the replacement of these older aircraft will need to happen. So from both you've got demand. You have demand that will maintain demand for both the supply and on the demand side, it will continue to be fine.
Can I ask you maybe more generally in the trading environment? You chat to some people and they will say, look, the big guys are being slowed down on the OEM side, therefore they're divesting less. Mm-hmm. So we don't have a properly functioning trading market at the moment. Is that how you'd see it, and where do you see the trading market going in the near term?
That has definitely been. So the larger guys selling less because they haven't received their new aircraft is definitely something I've heard, and that may or may not have been the case. We also had the fact that COVID slowed everything down. We also had the fact that last year there was pretty healthy trading anyway. I think this year is going to be a little bit different in the sense that some people will be constrained and will not sell because they won't be getting the pricing that they want, so they'll keep those aircraft. And then we're going to see people who have to sell and will sell at lower prices than they wanted to, but because they have to.
And just in closing, Mark, as we sit here near the end of 2022, what are your optimism levels like? So as you look out over the next 12 months, what are your hopes and what are your expectations?
Look, we entered into the COVID period in a decent place from a fleet perspective. We worked unbelievably hard to keep an even keel and succeeded. We refinanced a number of trades that needed to be done, including Sprite 17 into Sprite 21 ABS, and that was good. We retooled and expanded and improved in terms of our in-house skills. We retooled internally in terms of our internal processes. So I think we have a much better machine in terms of our skills and competencies and ability to do things. And I'm feeling extremely bullish about next year. I think we're going to be doing great. We're going to have plenty of opportunities to deploy capital. And no, we feel good.
Well, on that very optimistic and hopeful note, Mark, I'd like to thank you for your excellent insights today and wish you and WorldStar a very successful 2023.
Thank you very much. Pleasure.